Hey everyone, it's Trader Tim from E-mini Mind doing a Monday market analysis video and taking a look at the E-mini S&P. I have this horizontal line drawn. That's just the prior all-time high in the ES, and you can see we closed at this inverted hammer, so we weren't able to close, at least here on the ES, in new all-time high territory. We went into all-time highs, but we didn't close there. And so that's going to be really important. I guess if I go back, we can see really our highest close is a 39.75. And so if we compare that, today's close is higher at 42.50. But I just put this line at the all-time high. And so I'd like to see us, move higher and close above that. But with the inverted hammer, that does kind of signal the potential for some selling. So if we break tomorrow below today's low of a 41, 29.41, then a little bit bigger pullback could ensue. I wouldn't be super surprised to see a hammer form following this inverted hammer. We had the big body candle here and then two pullback days, but we didn't break the big body candle's low. So if we were to break today's low, that would really be the first, what I would consider prior day's low break. Because if you look in here, these two candles are still inside the big body one here. And then we come back here. This low on the 22nd is still above the prior day's low. And so we have to go all the way back to the 18th to where we have a swing low. So the two important levels, low levels that I'm looking at are a break of 29.41s and then a break below 28.95s. Now, I would think 2900 would act as support again. We had quite a bit of time spent just below it and then spent just above it. But if I draw from the prior 50% to highs, that puts us down more along the lines of 28.70. So we'll see what the week brings. Tomorrow we've got a whole bunch of stuff in the economic calendar. Consumer confidence, home sales, home price index. Let's see, Wednesday there's a Fed conference, and then Thursday is natural gas, Friday employment. So some bigger things happening this week that could either scare or add confidence. Now that we made it to all-time highs, it seemed like it didn't matter what the news was. The market just shook it off and pretty much from this 2800 and moved up to the 2950s. So 150 points of the market just kind of shrugging everything off and moving higher. Well, now that we made that new high, you may have more, not necessarily heavy shorts coming in, but people maybe seeing it as a time to sell for those that either bought down here or bought way down here. Like I was saying last week, it's only the end of April, and already the move that the market has made from the start of the year till now in 4 months. I mean, that's most of these hedge funds' entire years worth of profits made in 4 months. So to close out of a position or a series of positions that have just been cruising along all year, or at least scale out heavily, and then maybe play the rest of the year conservatively, or at least through the summer and kind of see what happens. That's one strong possibility. One thing I wanted to point out is actually two things. On the ES chart here, last time we were up at highs, we kind of dipped and formed this double top. So over the course of this next week or two, I want to see if we dip and form another double top. If we make a deeper pullback, anything holding above 2850s is still, no reason to be overly concerned. It's kind of funny to hear the media talking about, we're still coming out of the recession, or the market's heading for a recession, as opposed to just sort of being in the moment and experiencing what's happening right now. Then the second thing I wanted to point out on the volatility index is that we weren't able, or we haven't yet made a dip lower. So I would like to see a move higher in the S&P matched with a move lower in the volatility index. And if we go through and look at like the top line figure ETFs, nothing incredible with volume to speak of. And the S&P was up at highs, Dow just off them, the NASDAQ up at highs, and then the Russell as well. So, all three markets are pretty much in the same boat. And so if we do start to get somewhat of a pullback, I would want to look and see, okay, are all four markets pulling back? And if we break a swing low in the S&P, are the other markets breaking their swing lows? Because sometimes what happens is you get a pullback in one, but the other ones are kind of strong. So when you break that swing low, you end up with a dip intraday, and then you get that V reversal where you dip in the morning and then you rally right away, and you end up with a big hammer on the day, and that solidifies another swing low, and then the market takes off higher from there. So no reason to really panic or anything like that, but the inverted hammer, I am keeping my eye on that for sure. That does produce a little bit of a red flag. So we'll see what the week brings. Today, not a whole lot happening in the ES, and tomorrow we'll be doing a live trading session. So you can tune into that over at eminimine.com/VIP. Thanks, and we'll talk to you in the morning.